and welcome to this wealthmanagement.com Fast Chat. My name is David Armstrong. Today I'm talking with Corinne Anderson, who is the Vice President of Retirement Product Strategy at Protective. Corinne, thanks very much for joining us.
Thank you so much for having me.
So, Corinne, when you're out talking to advisors, what are they saying are the impacts from rising interest rates? What are the impacts that are having on their clients with rising interest rates?
Yeah, well, right away, the main thing people are feeling is just that the decreasing value of a dollar, right? Everyone's kind of feeling that when they go to the grocery store or the gas station, your dollar's just not stretching as far with inflation. The flip side of that, and really the silver lining, is on the retirement savings side. So over the past year and a half, we've seen a whole lot of annuity companies and savings companies being able to increase rates and offer just better savings rates for clients who are trying to save for retirement, and offer increasing lifetime guarantees on products like their guaranteed lifetime withdrawal benefits. So for advisors who are looking to help their clients really build that wealth and build that nest egg, that's kind of the flip side here, and a great time to start really thinking about those retirement planning conversations.
So given the current economic climate, I mean, we've seen what's going on. We do know that rates are rising. Is it a good time to buy annuities?
I think so, absolutely. So we've really seen over the last couple of years, really, insurance companies increasing those payouts and making it so that clients who are looking for guaranteed income are really able to maximize their value right now by locking in those guarantees.
There are so many variable annuity solutions out there in the marketplace. I think, advisors get confused, and certainly their clients get confused. So what questions should advisors be considering when they're looking at different kinds of annuities?
Yeah, there's been a whole lot of innovation recently in the annuity space. So I think it's a really good time for advisors to kind of take a second look if they haven't seen what's out there lately. When looking at these conversations and having these conversations with your clients, one of the big things that advisors should really be looking at is what are the guaranteed rates that their clients can lock in. There's a great value in having these guarantees in terms of your lifetime income, so that clients can really let their other money kind of work for them in terms of equity growth. But when looking at those planning conversations and looking at those guarantees, it's really important for advisors to think about it holistically and think about not just when a client retires exactly when they plan to, but what happens if they end up retiring a couple years earlier or a couple of years later. What we've seen from LIMRA is a study showing that about half of retirees end up retiring earlier than they planned. So while it's really helpful to make these plans and have an idea of what your guaranteed income is going to be later in life, it's important to also recognize the flip side and keep that flexibility in mind.
Yeah, particularly if labor market gets a little bit tougher, economy goes down a little bit, maybe people will be choosing retirement earlier. What you talk about innovation in the annuity space. What kind of innovations have you guys been pursuing there at Protective?
Yeah, so we've really been focusing on kind of finding that balance between guarantees and flexibility. Our newest variable annuity product, Protective Aspirations, has a few innovations in this market and focuses on that. We have two guaranteed lifetime income benefits within the product. One we call Secure Pay Protector, and it's really focusing on just maximizing that guarantee. It's built to really work with how clients want to invest, so it allows higher equity investment earlier when you're trying to build that growth, and then a little bit less equity exposure, kind of tightening down on your risk when you're in that withdrawal phase and trying to live off of your income. Our other GLWB Protective Investor is really focused on being a low-cost solution for people who are really focused on that growth, but want the guaranteed income to be more of a secondary protection and kind of a safety net for them. We also focus on some of the pitfalls that sometimes people run into with guaranteed annuities with lifetime withdrawal benefits. A lot of clients we've seen actually end up taking less than their full allowable withdrawal amount for the year, but that you don't really get any credit for that with most annuities in the market right now. Our feature Secure Pay Reserve, which is available on both of our guaranteed lifetime withdrawal benefits, allows you to kind of bank that unused amount, carry it forward so that in later years, if you need to take a larger withdrawal, you can do that with the money that you've saved up without worrying about decreasing your lifetime income. So you're still protected for that longevity risk.
Right. We talked a little bit about the challenging economic times, the way things are changing here, both in the markets and possibly the labor market, recession on the horizon, perhaps. Could you tie some of those innovations you were just talking about with your products to what's going on in the broader economy right now?
Yeah, absolutely. So one of the things we really focused on was just knowing that people are going to have to change their plans, knowing that you can't predict exactly when you're going to be able to retire, given everything that's going on out there in the market. Really focusing on the fact that whenever you do decide to retire, you will get the best guaranteed lifetime withdrawal benefit value that you can. So rather than having these sort of withdrawal rate cliffs where you have to wait until age 65 or age 70 or whatever it might be, our income does step up in terms of the withdrawal rate at each age of deferral, so that no matter when you decide to retire, you're still making the most of that deferral time. It's also really focused on making sure that clients can participate in the equity market. When you have this secondary safety net, when you have this guarantee in terms of your income, you can really focus a little bit more on growing the money that is invested in the market. That's the whole point, right? So really focusing on making sure that clients have a robust suite of funds that they can invest in and can really participate and make the most of the equity market. That was one of the things that we really focused on.
Interesting. When you're out there talking to advisors and you're giving them guidance on how the conversations they should be having with their clients, what are you telling them? What should advisors focus on?
Yeah, so really advisors need to think about their client's whole portfolio and what guaranteed income can do for them in terms of allowing them to play with their asset allocation a little bit differently. It's also really important for advisors to think about the financial strength of the company. You're making guarantees for 20, 30, sometimes longer, as long as a client may live. And so knowing that you're working with a company that's going to be there and that's going to be able to live up to those promises years and decades down the line is really critically important for them.
Well, this is fantastic. Corinne Anderson, great information. Thanks very much for joining us.
Thank you so much.